And that's how we did. It's actually, I think, a funny story. I don't know if it's funny, but 2 months in, there were two players in Mexico doing something similar to what we're doing. It was a bank and a tech company. And 2 months after we started Pomelo, so the bank got their license to withdraw, which is something that never happens. Very strange. And then the tech company was after a regulatory license and got denied right the same week. And there were a lot of customers operating below them, like suddenly had no one giving them the service. I was only 2 months in. Probably Mexico was around 6 months in. But after we saw that, I remember with my co-founder, we saw these news and we were like, okay, I guess we're on a plane. It was during the pandemic. So after we saw that, we were testing ourselves, got into a plane, and we decided to launch Mexico because there was a window that needed to be covered. And that was how we went to Mexico very fast. And with clients already, because we had all these clients that were suddenly left without a solution, and they were very willing to try something new. So that's how we launched in Mexico.
Hi, everyone, and welcome to La Frontera, a podcast dedicated to exploring the dynamic startup and venture capital ecosystem in Latin America and the innovators behind it all. We're your hosts, Cyrus and Tom. If you enjoy this conversation, we invite you to subscribe to our newsletter where we announce new episodes and share additional insights and resources for founders and investors alike. We'd also like to invite you to share this podcast with your friends and to leave a review on Spotify, Apple, or YouTube to help more people discover the show. We love hearing from our audience. You can connect with us on LinkedIn and Twitter by searching for La Frontera Podcast. In this episode of La Frontera, we sit down with Juan Fantoni, co-founder and chief commercial officer of Pomelo, one of Latin America's most ambitious fintech infrastructure startups. Juan walks us through his journey from Mastercard executive to fintech founder and how he and his co-founders built Pomelo to power card issuance and embedded finance across the region. We dive deep into launching a B2B startup, the strategy behind Pomelo's rapid multi-country expansion, and what it takes to succeed in complex markets like Argentina, Mexico, and Brazil. Juan also shares his approach to raising capital across boom and bust cycles, including how they closed a rare Series B in a tough market, and speaks candidly about managing dilution, choosing the right investors, and building a generational company in LatAm.
Welcome back to another episode of La Frontera podcast. Today, we're super excited to welcome Juan Fantoni, who's one of the founders of Pomelo. Juan, thank you so much for joining us.
Thanks, Thomas. It's great to be here. Great to talk a little bit more about Latin America, what's going on, and how I can help more investors and more Latin Americans to get into this world.
Perfect. Sounds great. And let us know whenever you need a quick timeout, a quick mate break. But
I'll be having mate. Yeah, I'll be having mate the whole time. For people that are not familiar with this, it's a typical Argentine drink. Also drinking some other places in Latin America. You'll see me drinking this. I'm not taking drugs during the podcast, just to clarify.
This podcast is rated R, so that is allowed as well, but probably not on camera. But
not the case.
Salud. Salud.
Thank you.
And also a quick side note, this is interesting. So about a year ago, I cold reached out to Juan while I was looking for summer internships, looking at like LatAm fintech. So obviously Pomelo came up being one of the most interesting ones. And I was a little bit bummed out when he said Pomelo didn't do internships, not even for fellow Kellogg MBAs. But at least I got him to agree to a podcast episode when I would return to or go to Buenos Aires to study abroad. And funny enough, that was before we had even really thought about recording any episodes. So Juan, you were actually the first person we actually asked to record with us and confirmed. So it's awesome that we finally are making this happen.
Yeah, we also have some travel meeting in Buenos Aires. I don't know if you remember, but the day we were supposed to have our coffee, my daughter was born right at the same time. So I had to cancel Thomas a couple hours before. I was going to the clinic, to hospitals.
I wasn't sure if you were big timing me, but it's definitely a bit. It's definitely a valid excuse.
I sent the classic like I have a personal issue. This was really important.
No, but
congrats on your daughter, by the way.
Thanks.
Yeah, Cyrus also a new father as well.
Yeah, it's
So
been special.
yeah, no, but amazing that you still were able to meet me a week after, despite having a new kid, have probably super busy with Pomelo after raising and everything. It's great. Anyway, all right, I digress. So Pomelo. So Pomelo is, to me, one of the most interesting fintechs out there. Truly groundbreaking what you guys are doing in LatAm. Basically building the infrastructure for fintechs and other embedded finance players to issue, process, and then manage their own card operations across LatAm. And you guys have raised over 120 million to date and seem to be on the path to unicorn status. And I would love to just start by you telling us kind of the beginning, right? So if you could tell us about your background before Pomelo, what led you into the world of fintech? You worked at Mastercard and then met your co-founders. So the whole story and the decision to start Pomelo would be great to hear.
Sure. Okay, so a little bit about me. I was born and raised in Argentina. Started my career in something very different, consumer goods. Back then, it was a cool career to pursue. Then after a while, I understood there probably some different stuff I could try. And when you're a little bit lost, what people do is you go after an MBA. That's what I did. Back then, I went to Kellogg for my MBA. I was still lost. So what you do is you do consulting, right? Until you figure it out. So I did consulting after Kellogg in Chile. When I was doing consulting, one of my projects was for a bank. We're doing the 5-year strategy for that bank. And when I was there, I discovered payments. And instantly I knew there was something very interesting going on in payments and where the future was going. So I got hooked. I knew I wanted to have a career around that. So after that, I got a job at Mastercard and came back to Argentina to work for Mastercard. And when I started Mastercard, I decided I was going to do payments for a long time. Back then at Mastercard, I ended up having the responsibility of what it was called non-traditional issuers. Mastercard was built to serve banks, but suddenly some other type of entities were demanding Mastercard products, right? The cards. So until we figured it out, then we discovered this was called fintech. And it was a huge deal and it was happening all over the world. And Latin America was having a lot of success. So this grew very fast. And before I loved payments, but then when I discovered fintech, it was like payments and fintech. This is really interesting. And when I was at Mastercard, for me, it was very obvious. You had all these fintechs trying to do very innovative products. But the underlying infrastructure, that was the infrastructure that banks have built 50 years ago, was completely obsolete. This was the same technology, 30, 50-year-old technology powering the cards of Latin America. So no matter how innovative or how much tech you had, if the underlying infrastructure was really obsolete, it was very hard to innovate. So for me, the issue was very clear. This was a big problem. There was a lot of money on it because this was very expensive also. And it was stopping innovation in Latin America. And after a while, actually during the pandemic, in the lockdown era, I was in my apartment and decided I would throw this idea into a deck. And I started the first deck around how to solve this. And I sent it around to a couple of VCs I knew and a couple of people in fintech I knew, to see if I was crazy or there was something to work around this. And one of the VCs came back saying, hey, now you have something here. It's definitely interesting. You should pursue it. And then one of the fintech CEOs I sensed told me, if you build this, I'll be a client. And the last one was one of my current partners, Gaston. He was the CEO at a big fintech in Argentina. Told me, hey, I'm actually leaving my job. So if you're serious about this, let's build something together. And then my other co-founder, Hernan, who was employee number 3 in Mercado Pago, who was working with Gaston at the time, also started joining the conversation. The idea evolved into something even more powerful. And that's how basically decided to start this. This was 4 years ago, 2021. The 3 of us decided to start this fintech infrastructure for Latin America. That was the original thesis. In a very special time, 2021, liquidity was there. And I think we had a very...
special is one way to describe it.
Yeah. I think we had a very compelling story, like a very clear problem, a very clear solution, very good founders fit. The three of us have seen this from different sides of the table. So we knew what needed to be done. And that combined into what you say, a very special moment. And that with a very good round, we started with a seed round of 9 million, which for Latin America, that was big, but still big. Back then was really big. And now after 4 years, we've raised 100 million. We have a 300 people organization operating in 6 countries. More than 130 issuers are issuing cards on Pomelo rails. And we started with small fintechs, but now the biggest banks of Latin America are also powering their cards with our technology. So that has expanded our influence in the type of countries of customers we serve. And yeah, that's a quick
amazing
story.
Yeah, no, it's an amazing story. Just in general, that's less than 5 years since you started this, raised $120 million in Latin America, and you're in multiple countries now. It is incredible. But that just goes to show if you can identify a problem, especially like an infrastructure one in LatAm, where there's a lot of industries that are inefficient, have obsolete infrastructure. If you are able to identify that, and if you are a good team and you execute on that, then you can really become the solution, right? And everyone is able to recognize that. That's why you have so many great investors backing you. I'd like to back up a little bit, talk about your founding team. If you have 3 co-founders, how do you decide who does what, right? Based on like strengths and everything, who takes the lead on what sort of responsibilities and everything. I would love to hear how you guys hash that out and I guess how it's working.
So I believe in our case was very natural and organic. So Gaston is the CEO. He had been CEO of fintech before and had startup experience before. So he's the CEO and leads most of the fundraising activities. Again, he had the CEO experience, the fundraising experience. For us, it was very natural for him to tackle all that. And then Hernan is our product guy. Again, he did this for Mercado Pago for 12 years across Latin America. And finally, me, I ran the commercial activities. And again, I was doing this at Mastercard for fintechs. So for us, it was very clear cut. I usually show that Gaston raises the money, Hernan spends it in products, and I get it back selling. That's a wheel that needs to keep going. And that's basically how we started. 4 years from now, I think it has evolved a little bit, but not much. The beginning, a lot of decisions were made by the 3 of us because we had a small operation. Now, I think what we do is we have specialized a little bit more. We can scale faster, but I think it has remained and it has worked very well. What I think is important here is we weren't young founders. So we're around 40-year-olds when we founded Pomelo. And I think that's an advantage because we all had a track record doing what we were supposed to do at Pomelo. And I think that also gives the confidence to each other that the other one is going to perform well at their jobs.
Yeah. I can tell you, I started as a young founder, just like a small like passion project a few years ago. Also during the pandemic when I had just way too much time on my hands sitting on the beach in Miami. And we were both kind of first time and had very quickly realized that we had to divide up roles and responsibilities. But I don't want to say like fighting over who would take the lead on certain things, but that was definitely a problem. So, I mean, I think if you have a little bit more experience on your hands, if you founded a company before, been a part of a startup, or you even know what your strengths are and are like humble enough to accept what are your shortcomings and someone is maybe better at something than you are, then that's really where the best teams I think are built.
Gaston, my co-founder, usually uses a phrase that I really like. That is high self-esteem, but low ego.
Or the Kellogg high impact, low ego.
Yeah, very similar. Yeah. Because I think first you really need to trust yourself that you're capable of doing this. And a track record helps, but really you need to trust yourself. But again, if there's stuff you cannot do or you're not the best suited to do, you need to have a low ego and let it go.
100%.
Yeah. It's kind of like the mantra of high performing teams that I think Harvard Business Review, published a while back in their magazine. But
I'm sure that wasn't Kellogg Business Review. We don't talk about
the highly esteemed Kellogg Business Review. Yeah.
Low ego and Harvard. I don't think that.
Yeah. Shots fired.
Yeah, that's why we decided not to go there.
Yeah. Yeah, that's exactly the reason. Just so my background as a product manager and working in product, would love to learn a little bit more about what the early days look like in terms of MVP for the product. Obviously, you guys couldn't build up Pomelo in a day, so this took time. How did you guys think about the initial steps, the initial product, and how you can launch that into the market to start to gain your go-to-market, essentially, how you can start to gain customers?
Yeah. I think this, when you do infrastructure for financial services, this is tricky. It's not as easy as other industries in the sense of the MVP is massive. You cannot do testing when you're managing people's money. So you really need to have a strong thesis to build towards it. And if you're wrong on that thesis, it's going to be it's a very expensive test. So actually and there's where our experience comes in place. There's actually, I saw a statistic the other day that fintech founders tend to be 38 or plus, basically because it's hard if you haven't been part of the value chain or really inside the industry. It's hard to understand it, right? From the outside. This is not a consumer product. This is very deep into the value chain, and you really need to have a knowledge of how it works. So our original thesis was, we started with cards, and that we knew from our experience. To do prepaid or credit cards, the infrastructure available was really obsolete. So we narrowed it down to that. And we also decided to start in one country, Argentina, a country that we knew very well. Probably back then, not the sexiest market to launch in terms of stability, etc. But we knew this was a market we will nail the product right away. Basically because of our experience, also our network there. The second part is the whole initial team. I'll say the first 30 people that joined Pomelo have been building this somewhere else. So we had a lot of industry knowledge to build this. But to have something that actually works a little bit, we spent around 9 months. And by the way, this is a complete record. People usually take 2 years to do this, to do something similar to what Pomelo did. But still 9 months is a lot to being able to launch something. And finally, when you do infrastructure and B2B, you need a design partner. That means you cannot launch to market by yourself. Only a client can launch your product to the market. And this is very tough. This is a chicken and egg situation. Nobody wants to be a design partner. Like, people want test solutions. That's why it was important for us to build it in Argentina, where the three of us had a reputation. We knew people in the industry that were willing to trust us to basically, our first client signed a contract with us and we haven't even written a line of code. And that requires, like I say, it was our reputation in place, our investors' reputation, and our ability to convince people we're going to deliver, right? It's the way to go in this scenario, because you build something that you know your partner is going to use, and you will get feedback right away for this partner. Our first partner was actually Velo, which is a crypto wallet in Argentina. Like I said, I'm very thankful. I will always be very thankful to them because they suffer, right? The first client really suffers. But again, in our industry, the status quo, what was available, was so obsolete that a couple of clients like Velo were willing to risk it just not to go with the current solution. So that really helped. And that was basically, we designed the solution exactly what this client was requiring. We launched it, iterated on that. And when we knew this was working, we expanded very fast to especially geographically.
I want to go back a little bit talking about Argentina. That's a great point that you guys decided to start your products in Argentina, right? Proof of concepts and all of that, because you had a reputation there, and that's the easiest place to launch. I want to go into a little bit about like the ecosystem of Argentina. You say it's not the sexiest market. I actually would almost disagree with that. If you talk about fintechs, maybe it's one of the sexiest because there are so many issues there to solve. It's which one do you choose? And there's so many other fintech players, like you mentioned, Bello, and like crypto wallets and everything, all these people trying to solve the financial issues in Argentina. Not that other countries don't have similar ones, but I would like to get your take on the ecosystem in Argentina. So I was there for about a month in Buenos Aires and I saw some pretty amazing things. I think the strengths there as a highly educated general population, a lot of people in tech, generally a cost efficient labor market, although right now definitely things are a little bit more expensive. And then a pretty solid and buzzing network of founders and former founders. Argentina has a very strong sort of lineup of unicorns like Mercado Libre, obviously, Globant, Auth0, Voila, hopefully you guys soon. And so I think there's a lot of strengths to Argentina, but definitely some challenges, right? So I think a lot of outsiders looking in might view it as like a volatile market, also one that's maybe too small for a startup to scale effectively and having to like expand. So I would love to get your read on your perspective on the ecosystem in Argentina, strengths and weaknesses and how it's played out.
Yeah, I think that you need to differentiate or split what it means to have a business in Argentina versus founding a company or having talent in Argentina. Those are very two different scenarios. And we actually leveraged that as a company since the beginning. When I told you the first hires were working on fintech before they came to Pomelo, and that's exactly what you were saying, right? There are a lot of fintechs in Argentina, Mercado Pago, Mercado Libre, to name one that has massive impact in Latin America. So there's a lot of people in Argentina that know how to build fintechs. Have been working in tech for 20 years, and that you don't find that a lot in Latin America. So that's a huge power to build something in Argentina. There are actually a lot of companies that have a tech hub here. Even they operate only in Mexico. They build teams here. It's one of the strengths of Argentina. One of the strengths definitely Pomelo has built on top. The quality of the talent we have is world class. And that has been one of the reasons why we've been able to build a high quality product at a huge space with this talent. When you talk about the market, like doing business in Argentina, the previous years have been very tough. Actually, when we launched Argentina, but 2 months later, we're launching other countries because we knew as a story to tell investors, especially international investors, having revenue in Argentina is very unstable, right? So you need a different story where you can show your product was at least regional, right? Especially if you want to build something big in Latin America, you need to touch Brazil and Mexico, one or both, ideally, right? That's a must. If you want to build a VC-backed company, right? That's why I was saying that was a test market, but we went to other markets fast. Right now it's a little bit better. We'll see what happens. Things are looking much better, but still it's a small market. Having a VC-backed company only in Argentina, only in Colombia or only in Chile, I don't think it's possible. We haven't seen it in the past. I think you need to think regional.
Yeah, it seems like there has been a trend, though, I guess, in Argentina where companies will start there, prove out their model, and then they've been generally pretty successful at expanding internationally. Obviously, each country has its own issues or problems, pain points that maybe the product launch in another country has to be a little bit different. And we can go a little bit deeper into that. But yeah, thank you for your insight there. That's really helpful.
I heard some VCs or some told us in the past is that Argentinian founders have this thing of from scratch, they think about a regional or a global company. And that for a VC is the kind of mentality they want to hear. So that I think has been a mindset of Argentine founders that have proven to be useful.
I think we would love to dive into expansion across Latin America, but one follow-up on that. So when from the get-go, since you guys had that global mindset, right? And this is something you mentioned about Argentinian startups, is that you had that global mindset. Did you guys start talking to potential customers across Latin America before you started the expansion? So did you already start doing customer conversations? And did that help essentially guide the way you guys were planning to expand? And the reason I'm asking that question is because we've talked to a lot of founders and VCs, and a lot of, obviously, let's say you're starting a company in Peru, Colombia, et cetera. Usually a lot of folks start with, okay, we're going to build a company here in Colombia, for example, and just grow within our country and then eventually think about expansion. But it seems like you at Pomelo started with, okay, we're going to start here, but immediately we're going to start thinking about expansion. Do you think that kind of helped, that international mindset from the get-go really helped with how quickly you guys were able to expand?
So first of all, we didn't have a global mentality. We have more of a regional, Latin America. At least at the moment. We'll see if eventually we'll become a global company. But from the get-go, it was Latin America. My experience at Mastercard had allowed me to interact with the whole market. So I actually knew from the get-go the opportunities that were available for us in Mexico, in Brazil, in Colombia. So I had both the knowledge and the network to get there. Right? So that's from the get-go. Also, our initial seed round was, I think, 5 times bigger than what we expected. So when we got that money, what we decided was, let's use this to make it our regional plans go faster. And that's what we decided to do, to use that extra money. Probably if we had more limited resources, the approach of let's start with one country first and then move would have been the right one. But when you have a big amount of capital, you'll be able to move very fast. Also, this allowed us to preempt the market. This opportunity for us, and we actually discussed this at the beginning, was very obvious. There was probably a couple of teams thinking about this. So going very fast to all the markets and deploying a big amount of capital will actually make us not only probably not the only player, but a very hard to compete player. Also, another thing important in this market, at least, there was synergies of being in more than one country at the same time. When you do infrastructure, the regional solution was very appealing to a lot of our customers. So being in more than one countries make each country more powerful, right? 1 + 1 was more than 2 in this case, because there were a lot of regional players that when we told them we could solve the region for them, we were a no-brainer. That's why we were in a hurry, or we saw a lot of value in expanding very fast into new markets. So it was a combination of the value prop and having capital.
And then thinking about like expanding to other countries, it's not as easy as it might seem. Like each country, I guess in LatAm, minus Brazil, speaks Spanish. The cultures are very different. Like Argentina versus Mexico, night and day. Even the Spanish is different. Castellano versus like just Mexican Spanish or Spanglish, some like close to the US border. So each country is complex for sure, has its own regulatory hurdles, different culture, complexities, idiosyncrasies. What was the strategy? What was the blueprint to expanding to different countries? How did you create those strategies, and how did they differ one to the next? And then I'm sure there's other different client bases probably for people that wanted to launch cards and needed that infrastructure, that baseline infrastructure. The existing infrastructures had to be very different from Argentina versus other countries. So what was the strategy going country to country?
So our industry is very regulation heavy. And that really sets the tone on how you need to expand to different countries. And this changes a lot from one country to the next one, even if they look similar. Regulations are usually very different. So that's how we started. We always started with a regulatory scan of each country. We actually have a very big, very good regulatory and legal team at Pomelo. So we invested heavily on that. Every time we went to a market, we know exactly how to operate in terms of the regulation. I think that the second part is we use a lot of our networks. When you see the first hire of each country, it was probably someone that has worked with us for Mastercard with us or at Mercado Pago with us. So we knew local talent that had worked with us in the past that we knew we could count on. And I think the combination of those gave us a pretty good idea on how we needed to deploy the product in those countries. And then there's actually the opportunities started to show you the way, right? And this is usually how it works in B2B infrastructure is, like I told you before, you need a customer to launch a product. So the customers will tell you what you need to build. Probably in B2C, you can just send a product to the market, even if the customer was not expecting for it. In B2B, that's not how it works. You need a customer to launch. And that's how we did. It's actually, I think, a funny story. I don't know if it's funny, but 2 months in, there were two players in Mexico doing something similar to what we're doing. It was a bank and a tech company. And 2 months after we started Pomelo, so the bank got their license to withdraw, which is something that never happens. Very strange. And then the tech company was after a regulatory license and got denied right the same week. And there were a lot of customers operating below them that suddenly had no one giving them the service. And it was only 2 months in. Probably Mexico was around 6 months in. But after we saw that, I remember we were with Hernan, my co-founder. We saw this news and we were like, okay, I guess we're on a plane. It was during the pandemic, so after we saw that, we were on our testing ourselves to go into a plane, and we decided to launch Mexico because there was a window that needed to be covered. And that was how we went to Mexico very fast, and with clients already, because we had all these clients that were suddenly left without a solution, and they were very willing to try something new. So that's how we launched in Mexico. And we also, going back to what I had told you about local talent, we hire our country manager in Mexico, which used to work with Man at Mercado Pago. So we saw opportunity, we hired the right people, and that's actually why Mexico is our number one market right now for Pomelo. But it was a mixture of opportunity and going after it.
So on that note then, so obviously with card processing, right, there's certain regulatory hurdles that you have to go over in each country, and each country might be different. Obviously, you have different partners as well that you might work with as part of the network. So you guys definitely have the leg up since you've worked in the space before, but what were some of the speed bumps or hurdles that slowed you down when you were breaking into Mexico? Because obviously you guys were opportunistic. You saw opportunity, decide to hop on it. What slowed you guys down?
Yeah. So we have a couple of regulatory licenses, Pomelo holds licenses. And that is just in Latin America. I think everywhere, but especially in Latin America, it's impossible to predict how long it's going to take to get a license, how long it's going to take to approve, what's going to happen in the middle. So we actually got a lot of bumps, a lot of unexpected things, but at the same time, we only knew it was going to happen. That was part of what we were embarking on. I think something we do very well is there's interpreting regulation. It's very important, understanding what you can do without a license and what you need a license to do. And understanding that very well can give you an edge in each country. But when you see a product offering in each country from far, looks the same. When you double click, each country has a different regulatory framework, a different product that has adapted to exactly what's going on. And I think that's the secret sauce. Just to give you a story, Mexico, the regulator decided that banking as a service is not allowed in Mexico. And that's something that is different from every other market. But again, we got into Mexico, we did a regulatory scan, understood that was the name of the game, and we play with those rules. So I think it's important to understand them and to go around them or go over them. It's also one of the reasons why it's very hard to compete with Pomelo if you're not Latin America. Comparables from us, when they look at Latin America, they tend to run away the other direction, which I think that's one of our main competitive advantages.
And one thing that you guys have also done, correct me if I'm wrong, but you're also operating in Brazil.
Yeah.
And that's something that a lot of companies avoid, right? So I would love to hear your stories about that, because I think, so I'm in Brazil right now, and I can tell you that there's a certain level of trust that you have to breach if you don't speak the language perfectly, if you speak Spanish but not Portuguese. Not many people speak both. I'm trying, but I also look like the biggest gringo on earth. So that's definitely not helpful. But in terms of entering a country and offering up a product, selling a product to players in a different language, different culture, something totally new for them must be difficult. So I'd love to hear your experience with that.
So There are three types of successful startups in Latin America. So you got the ones that do Spanish LatAm, and they leave Brazil outside. You got the ones that do only Brazil, and you have the ones that do all Latin America. And the three of those work. Like you have very successful companies in those three spaces. You have companies IPOing only in Brazil, and very big companies doing only Spanish LatAm. So this is what a discussion we had early on. The kind of company we want to build, the kind of impact we want to do in Latin America, we right away understood we want to be everywhere. So Brazil for us was from day one, we need to be in Brazil. It's the biggest market in Latin America. For us, it makes no sense to leave it away. And that was from day one. However, I will say it's probably the biggest challenge for us and for most Latin American companies. Entering Brazil, it's a league on its own. When you think about especially the payment space, Brazil is 5 years ahead. So not only it's a different market, it's a way more advanced market. The bar is higher. That's how it works. So the product that can be very successful in Colombia when you go to Brazil is a standard in the market below the bar. So that gives us a different challenge. We always thought about that in the way that if we're able to succeed in Brazil, which, by the way, we're doing very well in Brazil, if we're able to succeed there, then the rest of Latin America should be, I'm not going to say a piece of cake now because it's not, but we should really be very successful in the rest of Latin America. And a lot of innovation that will be developed for Brazil would then be needed in the rest of Latin America. And that's how we think about that. But it requires, again, we only been able to do this because we had a lot of capital from the start. And that's how we decided to deploy this capital, going after the biggest, most difficult, most rewarding country from the get-go. If I were a bootstrap company, I'd probably tell you, don't go to Brazil, you will die.
Yeah, that's a great point. You basically, from the get-go, like you mentioned, were able to raise enough capital to do that. And through your various rounds that happened very quickly, like within a year or two, you were able to raise a Series A and then a Series B. I would love to talk about then the differences, right, of raising all those rounds. So easy 2021 raising 9 million. I'm pretty sure like another million extension very soon after. In your seed round, 2022 also, I think with your Series A, which was 50 million, probably easier to raise. And then Series B, you raised in early 2024. I'm sure starting in that process in late 2023, where there was not much available, right? Liquidity was drying up in the US as well. I'm sure Latin America, a lot tougher. Not a lot of companies were raising, definitely not a lot of companies were raising 59 million. So I'd love to hear about the differences in your experience going from seed through Series B and especially in that Series B, which is like typically a big bottleneck for LatAm companies. You need international investors to scale there. If you could focus definitely on Series B, that would be helpful.
Yeah, I think I touched a little bit on Series A on our seed round at the beginning. Then our Series A, again, was during this high liquidity times. It was preemptive. Actually, we weren't even looking at it, but we got offered a big round right away. So I think we decided to take it, and which I think was a great decision. We decided to take it, not to spend it, just different things. I think there was a little luck involved because we raised Series A, but then a couple months later, the market shut down and we saw it with the money in the bank. So we knew this was money that we needed to be good for at least 2 to 3 years. And that's what we did. And then Series B came in 2023. We started fundraising second half of 2023. And this was actually a decision that wasn't obvious for us and wasn't easy, that we didn't really need it to raise, but if we wanted to continue investing and growing at the rate we were going, it was probably the best moment to raise. But the market was completely different. I would say it was below average in the history of fundraising. 2021 was way over average. 2023 was below average in terms of how easy it was. But we always thought that good companies can always raise. Probably the terms were not going to be the best, and we knew that. For us, it was more important to keep building the best company we could than having a little bit better or worse terms. So we decided to go for it, and the conditions couldn't be different from the previous ones. A lot, actually on our seed and our Series A, there was a lot of international investors that jumped right away. But after 2021, a lot of international investors that were jumping into LatAm decided to go back to their core markets, and we're not doing Latin America anymore. So that really took away a lot of investors that were just focusing on their core markets. And then when we started the fundraise, the funnel was very steep, right? After a week, started with 100. After a week, we were only talking to 20. And that's how hard it was. Also, how deep they went into the numbers of the company, the fundamentals. Luckily, by end of 2023, we were a growing company. We had very good clients. We have revenues. We have positive margins. All the fundamentals were there to do a good round. So we were able to tell a compelling story that finally was bought by some good investors. Kasek led our Series B, which was exactly a Latin American investor, probably the biggest one, that hadn't been able to invest in Series C and A, but they saw Series B as a good moment to jump into your story.
Yeah, maybe tougher to raise back then, especially a lot of money. If anything, it sounds like a little bit healthier of a market if it's working like that, right? If VC investors are going to invest in the companies that they feel comfortable investing with after doing their due diligence and everything. And those companies like you guys are fundamentally sound, growing, it makes sense. And I think Cyrus is very interested, as am I, to hear about your cap table, right? At this point, it's really interesting to be able to speak to you because you guys have already raised your Series B and have gone through everyone. You've talked to practically every VC who invests in Latin America, probably at this point. Cyrus, floor to you.
Yeah, thank you. Yeah, this is something that I was talking to Tom actually beforehand, because obviously you have a very impressive cap table, right? And you're one of the few folks that, have gotten to Series B. You've raised quite a bit of money, but curious about how you guys have been thinking about dilution for the founders, and then also how you guys have been managing. We'll answer that first, and then after that, would love to get into how you guys managed how much money to raise at each round, because obviously you guys also got whipsawed through the different 2021, 2022, and then now 2024 raise. And the reason I'm also curious about that is recently I've been talking to a few friends who have been trying to start their own companies, and they've been going through that same debate internally about like how much do we actually need to raise, because they don't want to raise too much, too little, etc. So we'd love to get your thoughts on that.
Yeah, we always knew this was a capital intensive company at the beginning. So we already knew we had to raise quite a bit of money. Dilution is not something we discuss this in every funding round, but it's not our main worry. We always think about how we build the biggest, most impactful, most generational company of Latin America. And that's what's on our minds. And if dilution has to be a couple percentage higher, lower, that's not something that really keep us awake. It actually, the first couple of rounds were very good in terms of every metric you can do. Valuation, dilution was very pro founders. And then probably Series B was more pro investors. Although good investors are also, they usually don't give you like bad terms. They're a little bit worse, but good investors really want you to have a healthy amount of ownership in the company. And you can always, even if you got very diluted in a round, there are ways for you to recapitalize in the next round to be able to gain more ownership as a founder. So we did a couple of those too. So I will say right away, I'm not concerned about dilution. Hasn't been an issue, at least for us. And again, this is something good investors take care of. Good investors are concerned of how much ownership you have in the company, because they know it's also in their best interest that you have a big ownership. I think we have very good investors, so we haven't been on our minds a lot. Also, when you want to do a big VC-backed company that probably going to IPO and continue, you need to be comfortable with dilution. Like when you get to an IPO, You're not going to have 80% of the company. That sometimes it happens, but that's not the way these companies are built usually. So I think we always saw this as part of the game. Also, a decision we took very early on, and we actually discussed this as co-founders, is what type of company do we want to build? Is it a lifestyle company? Is it a VC-backed company that's going to be huge? And we also always went for the second one. We knew right away. We even discussed what happened if we want to be acquired after a year. We were like, no, that's not what we want. We want to build something huge. And if you are in the VC route, it's not the only one. There are many ways of building a company. If you are in the VC route, dilution is conversation. I don't want to minimize it. We actually do look at it and we pay attention, but it's not our main focus. Like, for example, on our Series B, our main focus was to raise from a very good fund. And if we had to be diluted a little bit more on that round, well, we were okay with it. Not that it happened, but we were okay with it.
So it seems like you guys were thinking through, okay, well, we're okay giving up a little bit more in terms of equity if it's the right partner, which is the perfect way to be thinking about that. The reason I was thinking about dilution is there's been just some discussion among some VCs recently about how in the VC game, a lot of founders get to their exits and at that point they're so far diluted that they end up with pretty minimal amounts by the time they actually exit. So it got me thinking about especially in Latin America, where we've seen some VCs or some investors take large chunks of equity up front, like early on. And that it's not very founder friendly. So that's why we were curious about what kind of dilution you guys have seen since you guys have been working on Pomelo for at least the last 3 to 4 years.
Yeah, I think in that sense, I'm a little bit spoiled in terms of the quality of the funds that we have. We have very experienced VCs that have already went through a lot of rounds and know they should leave you with enough. So I think
you need to have some sort of incentive, right?
Yeah, but I know in the early 2000s, some VCs will take half of the company in the seed round, but I think that's just not there anymore. At least from if you have good investors, that's not even in the table.
Yeah, exactly. So one last follow up to the point about how much to raise. How did you guys think about per round what the right amount was? Obviously, earlier in the company, and correct me if I'm wrong, I personally haven't founded a startup and a VC-backed startup, but what I've heard and what I've seen is earlier on, it's probably a little bit tougher because you don't really have revenue, you don't have a lot of costs coming through, so your financials are going to be just off your best estimate. But once you grow, you're able to better estimate how much funding you'll actually need, and so you get better and better at that. What are your thoughts? What would be some of your advice for folks that are just starting out on how to estimate funding and like that growth over time?
I think at least for us, we knew what was the minimum we needed to build this. Like I say, we knew we needed a couple $1 million to build it. That's not always the case. Some companies could be built with a lot less. So we knew that was our baseline in terms of if we have this amount of money, we're going to be able to build our MVP. But then it was more of a offer and demand. We ended up raising a bit more. But the main reason was there was more capital available, and we knew that was not probably going to be forever. So we knew raising more on this moment was probably a good idea. The same thought happened with Series A. It was a timing thing. We knew the market was pro-founders, pro-raising, so we just raised more than we needed. And that's just, there's not a very scientific way of putting this. We timed the market and we knew it was a good time to raise. Then our Series B is a completely different story. We knew how much money we needed for the next couple of years. You don't want to be raising every year, so you at least need a couple, 2 to 3 years of run rate. So we knew what we wanted to do. We had our plans, how we were going to invest that capital. And that should be the indicator of how much money you need to raise, right? What you want to do, how much capital you need to deploy in order to do it. And you need the VCs to buy into that story, right? And I think with this capital, you'll be able to do that. So I think that's the basics, right? What do you need capital for? And then if the market is right or wrong, sometimes what I've seen also in the past year, completely opposite from our initial raises, people raising less money that will probably need it because they say, okay, the market is not right. So I'm going to raise for a year and then jump again into the market. So I think it's a combination between how much money do you need and how good you think the market is.
And then it also depends what kind of company you are and what stage you are. If you're, like you guys said, like you were trying to grow as quickly as possible and expand to different countries, which is extremely costly. There were other competitors, so you wanted to be first to market with your products. Obviously, you guys needed to do it as much as you could with that. I think some other companies, if they're able to bootstrap at first, they feel product development can be like a little bit slower. Maybe they're already in Mexico and they just want to focus on Mexico, or they don't feel like they need to expand right away. I guess it's like context dependent, but it's great to hear your story on that because you guys had such a whirlwind of a few years and were successful each time.
I was going to say one thing I just wanted to call out real quick. I absolutely love the featured post on your LinkedIn where it's one that was from 3 years ago when you decided to quit Mastercard. And the one right next to it is when you guys raised your $40 million Series B. That's my favorite.
Yeah. Yeah. Hasn't been long, but yeah, it's quite a ride. Yeah. Some other thing I get asked a lot in terms of bootstrap versus raising money. How much do venture capital influence your business or require you to spend money or not? And when I started, this is my first big startup. I had a lot of preconceptions of what it meant to have a VC backing you, a lot of bad ones for some reason. Our experience with VCs has been very good. There's, I'll say, minimal interference in the business. They come in as much as you need them. And I remember the first couple of meetings we had with some venture capital that we were like, especially with very experienced one, or what should we do? And the answer will always be, I don't know. You should know. I'll probably think about it this way, or I've seen companies do that, but this is your company. And I now that I've been through it, I find it very hard for a VC to be able to tell you how to run your business because this is so hard. You need to be so immersed into it to be able to get to the right decisions. And being from outside, it can probably give you some pointers, help you think about stuff, but you end up running your business. And I think having capital is useful, right? And good VCs will just give you capital and let you work.
That's good. That's definitely a really good perspective. An interesting one too, I guess. It depends on what you're looking for. I'm sure like some partners are probably a little bit more involved than others. But you guys have every type of partner there is. So yeah. I'm sure it seems like it's worked out so far.
Yeah. In some spaces, it's really helpful. For example, for us, in terms of commercially, venture capitalists have been very helpful for us in terms of getting interest, getting endorsement from them, working with companies that we are in the same portfolio. In that sense, VCs have been very helpful for us and very grateful. Some of the VCs we have, the partners are super senior, super successful people. So for them to give you time, it's awesome.
It reminds me of the Stripe story, right? Where Stripe went through YC and then YC pretty much recommended Stripe to any other fintech company that went through their accelerator. And that contributed a lot essentially to their growth. And so having the right partners, like you just mentioned, that's key because they can provide you with the intros that would otherwise take you a while.
Absolutely.
I'm sure this conversation is going to be super helpful to anyone listening who's thinking about starting a company or is already on that journey, because that is one of the biggest things that comes up, those challenges of how do you pick those partners? How do you raise money? And then how do you think about like how much you should raise and whether it makes sense for you to even be a VC-backed company. But anyway, thank you, Juan, so much. This has been enlightening. So yeah, thanks so much for your time.
Yeah, thank you.
Sure. It was fun. I'm still drinking my mate, but it was a lot of fun. Hopefully this helps more people jump into this world of entrepreneurship, which I think is very rewarding, definitely worth trying. And also
more than consulting.
More investors. Consulting is a great way to understand where to start your company. It's a great way. I always say when I think about consulting is I don't wish it for anyone, but I recommend it to it.
Yeah. I definitely share the same sentiment. Worked in consulting before and kept going back every time. I was like, okay, I'm in a career transition period. I want to figure out what I want to do. I ended up doing that actually. And then that's actually what led me down the path of startups. Actually, I ended up spending like a year in consulting, realized I didn't want to do that anymore. I needed to figure out something different. I ended up going to early stage startups. So
yeah, and hopefully, more investors jump into Latin America, which has been a trend in the last couple of years. Like I say, a lot came, a lot left, but there still that are active here. Hopefully, they see the returns.
Yeah. That's what we're trying to do. We're trying to educate everyone so that there's a little bit more sustainable, consistent investor interest, at least like international investor interest, so they can hop into great companies like Pomelo and facilitate those kind of like later rounds to scale companies even bigger. That's what you're helping us do here, is educate everyone about all the cool opportunities and maybe challenges as well, because there are many. Yeah. But thank you.
Thank you, guys.
Thank you for tuning in to another episode of La Frontera. We hope you enjoyed the show. You can listen to more great conversations on our Spotify, as well as on your other favorite streaming platforms. You can find us online at lafronterapodcast.com, and make sure to subscribe to our newsletter for show notes and to stay in the loop for new content. Ciao for now.